What's up everybody, I am Jaspreet Singh and the Federal Reserve Bank now says that a recession is possible. However, they do say that this potential recession will be mild and short-lived. You can call it a transitory recession, if you will. A recession is defined as 6 months or 2 quarters of economic slowdown. During the first quarter of 2022, so January, February, and March, we saw an economic slowdown, and this was a huge surprise to the Federal Reserve Bank. However, they did say that this was just a temporary slowdown and that the economy would bounce right back up in the second quarter of 2022. The underlying root cause of everything that's going on is inflation, and inflation was originally slowing down the economy because it was causing the price of everything to go up. And now that the Federal Reserve Bank is working to fight inflation, this inflation fight is also slowing down the economy. But you should have no fear because the Fed is here. At least that's what they say, because they said that they could fix the inflation problem without inducing a recession. Well, the Atlanta Fed just came out and they make predictions about where the economy is in. And just recently, they revised their prediction for the second quarter of 2022. And in fact, what they said is that our economy is not growing. In fact, it's not even going sideways. In fact, they said that our economy is slowing down and that we're already in a recession right now. Now, you might think that if the data predicts that we are in a recession right now and that our economy is slowing and that inflation is still at the highest levels that we've seen in over 40 years, that we are going to enter a recession because now we're just beginning the fight on inflation, and the fight on inflation is causing a deeper recession, and the fight on inflation hasn't begun working yet. Now, of course, I'm just a random guy on YouTube, but the Federal Reserve Bank does not agree because they said that while a recession is now possible, it's not guaranteed, but it is possible. However, if we do go into a recession, it's going to be mild, it's going to be short-lived, and our economy is going to bounce right back up towards the end of 2022, and then we're going to be booming right again because the Fed has the tools to fight the inflation problem, bring inflation back down without hurting the economy, thanks to a soft landing that they're going to perform. Now, if I had to make a prediction, I would predict that soft landing is going to be the phrase of the year for 2022, just like how transitory inflation was the phrase of the year for 2021. The dilemma that the Federal Reserve Bank is facing right now is that this high inflation that we're seeing is leading to an economic slowdown or a recession, because when we have this high inflation, the cost of everything from your gas to your groceries to your rent to your vacations all cost more money. And so if you have to spend more money to buy your daily expenses, well, you have less money to go out and spend on other things. And this causes a slowdown in spending because people just don't have the ability to spend money like they could before because everything is so expensive. So all of this inflation is causing an economic slowdown, leading to a recession because people just don't have the ability to spend like they do before. However, the fight on inflation, which is partly due to higher interest rates, also leads to a recession. Because now if you want to fight this high inflation, you have to jack up interest rates. And when you are hiking interest rates, this makes borrowing money more expensive, and this helps to pull money out of the economic system. So if you want to go out and get a mortgage right now, it's going to cost you a whole lot more money. This makes it less attractive for somebody to go out and buy a home, which reduces the demand to buy a home. And if less people are buying homes, that means real estate agents are making less money. That means mortgage bankers are making less money. That means banks are making less money. That means title companies are making less money. That means construction companies are making less money. All these things contribute to a recession, and this rising interest rates are not slowing down because the Fed has to raise interest rates in order to fight this high inflation. So if we don't touch the high inflation, we're going to go into recession, and this could even lead to other things like a currency crisis or other high inflationary issues. But in order to prevent all that, which is a even worst case scenario than just a recession, we have to raise interest rates, which cause inflation to go down, which could also induce a recession. And this is the path that the Federal Reserve Bank is on right now, and we're seeing the effects of this. Like a lot of the bubble companies that were formed over the last number of years were able to raise money at very high valuations because investment companies, venture capital firms, and banks were able to borrow money at very low interest rates because we saw the lowest interest rates in the history of time in 2020 and 2021. And so corporations and banks and institutions were borrowing hundreds of millions of dollars and just looking for places to invest them. And this created a whole boom of companies that were able to grow at super high valuations because companies and institutions were willing to throw money at these companies, hoping that some of them would survive and thrive. Well, those same companies today are struggling to find more money, and this is the reason why we've been seeing so many layoffs across the tech sector. It's the reason why we've seen a lot of speculative investments like cryptocurrency get hurt, and it's the same reason why we've been seeing so many crypto exchanges getting in trouble, stopping people from withdrawing their funds because they don't have the cash to fund all of these withdrawals. It's almost like a run on the banks, although these crypto exchanges are not banks, and some people are trying to pull their money out, and the crypto exchanges don't have the money to fund all of these transactions. On that topic, this is why it's so important that if you do invest in cryptocurrency, that you immediately take all of your cryptocurrency off of your exchange and put it onto a wallet. You want to have ideally a cold wallet, which is a USB drive, that way now your cryptocurrency is not on the internet somewhere, it's in your drive, and now if an exchange shuts down, it's okay, your crypto is on a wallet, or at the very least have a hot wallet which is on the internet. That way you can take your money off the exchange. And if you're looking for a good and reputable exchange, you can check out our sponsor FTX US. The reason why I originally started working with FTX US was because I liked how simple they made dollar cost averaging in cryptocurrency. So if you wanted to buy Bitcoin or Ethereum, all you had to do was push a couple buttons, enter in which crypto you wanted to buy, and then you could pick the frequency. You could buy it once, you can buy it once a week, you could buy it once a day. So you pick the frequency, and it was very simple, and the fees were extremely low. Their fees are lower than pretty much every other major brokerage out there, so more of your money can go to buy you crypto instead of just making your brokerage richer. But now I'm liking FTX from the company side a whole lot more because they haven't been doing the same layoffs and hiring freezes like other companies. In fact, they've been the ones that are going out, investing in and buying other crypto exchanges that are struggling. So they've been growing very quickly. They bought a chunk of Robinhood, they bought a chunk of BlockFi. So they've been growing very quickly, and they're going to be adding stock trading on their platform very soon as well. Right now you can trade cryptos and NFTs, and pretty soon you'll be able to trade stocks on their platform as well. And the best part of all is that because you are a Minority Mindset fan, you can also get some free cryptocurrency. All you got to do is click my link down in the description below and then enter in the referral code minority. And if you do that and you trade $150 worth of crypto, they will also give you $20 worth of crypto for free. So if you want to learn more and see how you can start using FTX US, I'll put the link to how you can do that down in the description below. This is where now you want to be looking for opportunity, because the reality, if you ask my opinion, is going to be extremely difficult, nearly impossible for the Federal Reserve Bank to avoid a recession. And while they say that this recession is going to be mild and short-lived because they can perform this soft landing somehow, the reality is I don't know how they're going to do that. I mean, right now we're still facing the highest inflation that we have seen in decades, and the economy is slowing down. And now they're saying that this recession is going to be mild and short-lived, but I don't understand how or why, because if the inflation is causing the recession, and we have the highest inflation yet, and now we're just beginning the fight on inflation, which also causes more deep pain in the economy, how are we just going to mildly sidestep this recession? We have a long way to go, and so this is where now you want to be preparing yourself, because the reality is when you have these types of volatile markets, when you have this type of economic slowdown, when you have these types of market crashes like we've been seeing happen, we're already in a bear market in stocks and crypto, and now the housing market is starting to slow down. This is where now you want to be looking for the opportunity, because you want to be the one that can now come in and buy assets on a discounted price, because an asset is something you buy for the sole purpose of making money. And when you have these types of recessions, you have these types of market crashes, people get scared, they panic, and then out of fear, they sell. Nobody makes a good investment decision out of fear, and you will never make a good investment decision out of panic. And so what happens then is when people start selling, that creates opportunity for now you to come in and buy this asset at a discounted price. The key here is you want to make sure that you're investing in an asset that's going to continue to be around for 5 years, 10 years, 15 years, and you want to invest in something that's innovating for the future. So you want to invest in something that's going to be around and that's going to actually make you a return. This means now looking for the opportunity when times are good. One of the things that I like to do is I like to make a list of companies. If I'm investing in stocks or crypto, whatever it is, you make a list of the investments that you're doing your research on. Find the companies that you want to own, or the ETFs or the index funds that you like and that you want to own. Then you're just waiting for a good buying opportunity. Every time you see this asset fall by 10 to 15%, this gives you the opportunity now to come in and buy. If it falls even further, then you can buy even more aggressively, because now what you're doing is you're not trying to find the right investment, you're just looking for the right price for your investment because you're doing the research on the investment. I call this drip investing, where now I'm buying in phases on the way down, and this gives you the opportunity now to buy in at a lower price. But this requires a couple things. One, you have to have the right financial education to know what it is that you're investing in, and two, you need to have the patience with the long-term mindset, because the reality is when you go through a recession or an economic slowdown, nobody knows how long it's going to last. Nobody knows what the Federal Reserve Bank is going to do. Maybe the Fed is going to say that, okay, the inflation problem, while it's not under control, we think it's going to get better by itself, and instead of trying to fight inflation, we want to fight a slowing economy. How do you fight a slowing economy? Well, then you cut interest rates. When you cut interest rates, that causes higher inflation because now you're stimulating the economy. However, it sidesteps the recession. It causes an economic boom, and that can cause asset prices to grow very quickly. And so this is where you have to pay attention to what's going on, because you can't predict what the Fed is going to do. You can look at the economy and say, okay, the economy is on a downward trajectory. But if the Fed opens up the money printer, they start cutting interest rates, they start quantitative easing, they start doing more whatever free money programs, well, that can cause a boom in the economy, but create more inflation. This is where you don't want to try to predict what the Fed is going to do, but rather try to understand the economy and make good investment decisions based on that. That means now understanding what's going on and finding the good opportunities to come in and buy, because more millionaires are made during recessions and economic crashes than any other time. What type of assets can you consider buying? Stocks, real estate, cryptocurrency, businesses. You just have to find the opportunity with something that you're interested in, something that you want to invest in, and then when you find a good buying point of a good asset, that's where you want to come in and buy. And the reason why it's tough is because everyone's going to tell you that you're stupid, that you're wrong, that the world is ending, that the markets are collapsing, but this is where you want to come in, go against the grain, do what the majority of people are not doing, and start buying assets when they're on sale. If you enjoyed this video and you want to see why the layoffs that we're seeing are about to get worse, I already made a video covering that, and you can watch that video by clicking this button right over there. Thank you for watching, and as always, keep hustling. So what's causing all these companies to struggle and now lay people off? Well, it ultimately comes down to the Federal Reserve Bank.